Yo, so you already know who it is. It's your boy Vino, aka, you know what I'm saying, best trader ever, best trader walk this earth. Now let me stop. But today we're going over our trade that we took to profit $1,291 to pass our second funded 50K challenge. It was amazing. Like they had the moments. I mean, they had the little arrows here because I had closed out, but I'm just I have from a previous video when I was still logged in because after I passed, they basically shut the account down. So like, I'm about to show you. I'm about to go there and show you guys right now. Um, how I passed both of these funded accounts. You know what I'm saying? Passed it in 3 days. Grateful. See, once you pass, you get the congratulations. You have passed your da 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 funded account. And this was the first funded account challenge. See, they upped it because I had made. Let's go down. First time ever trading it, I lost 1,000. I was up 1,500 on this, but then I closed out. I mean, I didn't close out at 15. I just was like, oh, this is crazy. Let me see how far I could go up. And then I ended up losing the rag. I was like, okay, let me lock in before I lose this account. And then I made 2K, made 2,500 the next day. But I didn't understand this consistency rule. Like I just did it so fast. So I was like, nah, they upped it 2K. So I was like, what? I passed it, blah blah. I was talking mad shit. I was like, yo, they trying to fuck me, blah blah. Like excuse my French, but anyway, the next day I was tight, ended up losing a rack. You know what I'm saying? I don't know what I was doing this day. 16 contracts, I only took 4 trades. I don't know. I'm still learning futures, but I lost 1,100, then I lost 1,000. I was down and now I'm like, damn, bro. Like I'm at 52. If I lose two more K, like I'm losing the account. Like you like I'm just tight. So we ended up losing that 1,100. I mean, losing that rack that day. You made 400 the next day. It was actually like nine something. Yeah, it was 9:45, and I had lost 500 previous, so my profit really was just $100 for that day. But as soon as I made that trade, and I was like, okay, I'm done. Like rack, cool. I hit that shit. I'm not about to worry about nothing. Next day, we hit 1,100 total trades, two trades, 578. So I basically it was like two trades for 578. I honestly don't remember like if this was. I don't remember, but obviously, it was four contracts, so yeah, I guess it was two. I guess this was quick. I don't remember this trade. I should have screenshotted it, but then we lost a rack that again the next day. So I was tight. Like I was just fucking tight. Like average winning trade, we had one 790 something, but we ended up losing profit. Like we ended up losing trade five. So I'm like only won one trade out of three trades that day. As soon as you lose the rack though, it just automatically like shuts you out. So like you can't continue to keep trading and shit like that. So I was a little down, like I was a little like, come on, bro, you gotta lock in, you gotta do this shit. And then the next day, 1,100. As soon as I hit 1,100 profit, I just closed out. Like as soon as it hit nine something here, I closed out, and then to finally pass it and win and pass the 50K contest, um, 790, and it was great. Like average winning trade, $740. I'm shooting 55% from the free throw line. Average losing trade is 471. So my win reward ratio, risk reward ratio, like it's pretty good. Like, you know what I'm saying? Risk to reward ratio measures the potential reward you achieve per trade versus risk losses you take. You know what I'm saying? So just like in Call of Duty, boom, boom, boom. I got a high risk reward. Like niggas is tripping. Like I'm shooting 50%. So this was our first account. So you see, like we went down. We started 49. Like we was down. We was under. We was in drawdown. We came out of drawdown, got back up to 52, and we dropped down 50. And like you see how we can't lose more. So as my profits rose, that rose. So I couldn't get below 50% after that point. And then I'm just slowly like trying to get back up, trying to get back up. Next, we meet up. I had a net P&L, but I'm still higher in profit than I was from here. And then we just got above that. Then we had to make an additional 2K. Boom. Boom. That's how we did it. But now we got our second past funded account, guys. Like our second one. And this one we didn't have no consistency rule. We just straight up just got in the charts and just killed it. Like, you know what I'm saying? 3 days, May 1st, May 2nd, May 5th. Like, you know what I'm saying? And we hit profit targets. Like, I'm grateful. Like 1,700 and then 1291. Like, and I was definitely in this trade the longest, 22 minutes. I mean, I was in this shit for 22 minutes. The rest of these trades, 2 minutes and 37 seconds, 4 minutes and 30 seconds. Like, these trades didn't take that long, but like to hit it in 3 days, like off of just that, like 2-0 for the day. You know what I'm saying? Like two trades, I didn't lose on both of them, so that's why it's exactly why the profit target was valid. Like, so like that's just it. Like we passed our second trading E-mini Nasdaq. We hit 3,055. Target was 3,000. Stay consistent. This is our second day, so soon I want to make another video where we click start express funded account. And yeah, we'll be trading live from well, not live, but we'll be trading with 50K. Like we've been, I mean, yes, it will be live, obviously, but we'll be trading with 50 fucking K. Like, thank God we are funded with 50K. Um, we just gotta keep the process going. Like the same way that we did this is the same way we have to continue to do every single thing that we do. Just like with Forex, I mean, obviously we're trading the same way off the same concept when it comes down to Forex. But you know, sometimes like the only thing that's faster is 30 seconds play. I'm on a 30 second. I have to be calm, cool, collected. I'm just watching the market show me what it's gonna do. I seen this happen. I seen the market trade through here, through the fair value gap, creating fair value gap, trading through these lows. And all I'm like, there's a bunch of liquidity down here. We had this low, and then we had this liquidity high, this liquidity low there, and plus, uh, like this line was just indicating that this line right here is indicating the lows of what's that session? Asian session. It's the lows of Asian session from Sunday. And today is Monday, May 5th, Cinco de Mayo. Seeing those lows get ran, and now we're expecting Asian highs and Asian lows. And now I was recently just saying in a last clip of one of these in the video that I was recording, that it's likely that when Asian lows or London lows get ran, we're gonna be targeting Asian highs or London highs. And that statement is still factual, but I just want to say like the context has to align as well. Like there has to be some type of bullish context that's telling you like, okay, off of this stuff that just happened, I'm expecting bullish momentum. So like if you just seen it and then you don't understand the context behind like whether, because it could just hit Asian lows and then continue to just keep dropping and run. Like it could have hit these lows and then just maybe hit this fair value gap and then just dropped all to these lows and then these lows. Like, you know what I'm saying? These lows were what? This is Asian low from from Thursday, and this is London lows from 5 a.m. from Friday. So these lows can get ran. Like all of this could be just a run up here, just to run these lows eventually. Like these lows might and eventually get ran because these are high liquidity levels. But for market open, if we think that these lows are going to get taken out, that means these lows have to get taken out. You know what I'm saying? Like if long term these lows from last week are going to be expecting like, oh, this might get ran. The only way you're gonna see these get ran is if the market goes bullish and then grabs liquidity in order to push lower. Like I was saying, you gotta buy before you can sell, and you gotta sell before you can buy. Like you know what I'm saying? So just like probably by this whole entire move, because this area probably came into it strong. But that's beside the point. We're still gonna focus on where we entered at. So last video I was basically showing off the channel that was here. Like it's a slight channel, but the most important thing we have to think about is the fact that it's trading below these Asian lows, and it's not breaking out. It's just continuing to create this like downtrend channel, and we waited to see basically a breakout out of that channel. Now I wasn't necessarily looking, but this is a strategy that some people, like, if you're still new, you can probably start practicing this strategy. Like, this is just one of the strategies. Like, some people are breakout traders, so this could have been a breakout move that you could have got a capitalize off when once you see the market break above here, and then like come back down and retest that area. But based on what I was basically looking at, I seen the market run here, run these lows. This was Asian low, this line right here. I should just mark it off, like, so you could be more, so it can be more clear for you guys. The sell side liquidity, SSL, and then we got another sell side liquidity. So see, this was the high time frame Asian low, 9:45 low that was created on Sunday night. Last night, basically. Last night's Asian low, and then last night's London low. So this means that we're trading in this level, and then we're creating a downward channel, and we understand that we're at these levels. So from these levels, we're expecting bullish momentum to run Asian London highs and Asian highs. Let me mark these off as external range. I'm just buy side liquidity, buy side liquidity. So seeing that, we're looking for some type of signal for the market to give us. So once we seen this strong like expansion out of this, it's like, oh, okay, this is the first signal. Because one, that's we got a fair value gap here. Market traded into the fair value gap, traded down, but it failed to create another fair value gap going down. But instead, what we seen was an expansion out of that, basically filling this fair value gap, inverse fair value gap, and then creating another bullish fair value gap after basically like what's the word? Basically invalidating the bearish fair value gap that was created here by creating a bullish fair value gap, which invalidates the bearish fair value gap and turns it into an inverse. So basically, on this is the 5 minutes, so I wasn't really on the 5 minutes. So of course you could see that, like, you're like, oh, there's no fair value gap here because on both sides the market was there was no gap. But when I go down to the 1 minute, yeah, this was inside. Yeah, so right here, because this is where we took our second entry, but this is where we took our initial entry. So right here on this move, I chose this fair value gap because it lined up with, first of all, we had this order block here, the last bearish candle in a down move. After the last bearish candle in a down move, blah blah. The last bearish candle in a down move, which becomes a order block, and then the series of down close candles. This was a change in structure delivery, like basically like the series of down close candles, price just expanded through. See, once they closed above these highs, this high, that's when I was like, okay, the market has intention of pushing, going bullish and shit like that. So we're expecting bullish. We're expecting bullish. You're expecting bulls. That's what we're expecting. And then it left the fair value gap. So when I seen this happen, I was just looking for the market to basically come back down and retest into this area. And I didn't enter here, but when it came up and then expanded through these highs, I was like, okay, we got a market structure shift, a second one. Like, we had this one, and that's cool, but I like this one a little bit better. This looked better. It was a stronger expansion. And I seen these old lows get hit, get ran through here. And I seen this fair value gap in this area, the market coming down and testing into it. And I seen this, like, this is almost like a breaker block. The last bearish candle, the last bullish candle before this like little slight downward move. The market just expanded straight through that. So I was like, okay, this would be an order block, but in this case, because the market got expanded through, I just assumed that it was a breaker. And I think I'm right, like in a way. So I didn't really care. So I treated it like a breaker, and then I had the fair value gap there. So I had these two like confluence, these two confirmations from chart from price, and then the fact that we had our EMAs crossing over and then we were above 21, the 21 EMA, like we had those confirmations. We had multiple confirmations, multiple signals. So after I seen them run on this low, and then I seen the expansion of this, when the market came down into here, I just took an entry. I was like, okay, I'm taking an entry. Like, so you see, like right here in this area, these are old lows getting ran. Old lows getting ran through. We see an expansion above a high. We seen the market leave behind a breaker block because it's also look, we got this one right here as well. Like so it could have been traded on basically on the 32nd. I didn't see this, but on the 32nd, did he even tap into it? See, yeah, it taps into the breaker block. So we had that. I didn't enter off of that. I just entered it once I seen this expansion through, and then the next expansion, I seen the market come down here into this area. I placed a buy. And that buy was correct. Like I was saying earlier, that buy was definitely correct. Like we seen the be held through. We was expecting London highs to get taken out, but before London highs got taken out, it dropped one more time to accumulate all of these orders that would basically to run all the orders that were created here. All this liquidity is equal lows, relatively equal lows. You know what I'm saying? Before like it basically just bounce, and then took off. Like that was a great trade, but they needed to grab more liquidity to push it towards London highs, which is what they did here. So once they ran these lows, I was like, okay, I got stopped out here because I moved after getting in and the price started moving up. I just grabbed my stop loss from down here because it was like right below, it was like right here, like at that low. I grabbed my stop loss and I just started moving it up. So I moved it to like right here. And then once it got right here, it just stopped me out. I didn't lose profit. I made profit, but it was just a small profit. And then I seen this fair value gap just running straight through. So I was like, oh, okay, this might be the market saying that it's turning over. Maybe it's not going to reach London high. Maybe it's going to continue going lower. Like, you know, that's what I was saying. Like it might continue and run London highs from last week. I mean London lows from last week or Asian lows from last week. But I look left and then I seen these relatively equal lows and I was like, okay, cool. Let's see what happens when it gets to this level. Like maybe if it just trades straight through, then okay, cool. Like maybe I'm wrong. But it just ran it traded that down and then we seen a doji candle like a hammer, upside down hammer. Well, it's not a hammer, this is not upside down hammer, this is a hammer. And then I seen this and I was like, okay, so it's holding at that level. Like this looks like a sweep. In my mind, I'm like, this looks like a sweep. This is liquidity sweep. Like they're grabbing liquidity. Like let me show you. Like turtle, like low key, like turtle soup. Like you know what I'm saying? Because I know that the market needs to grab liquidity in order to go bullish. So the market came down, swept that, and then seeing this fair value gap. My first signal was like either this fair value gap is going to get respected, like the market's going to respect it, and then continue bearish. Like this is going to be a signal that this is going to be the reason why the market goes bearish. Like because this is um the first bearish fair value gap that's been created after this bullish movement of it trading up. So I'm like, okay, this has to be the reason. But once I seen this expansion and then it held here, then this expansion, then expansion straight through the fair value gap, I was like, okay, cool. That's a signal right there. Like that's one strategy right there. Like you wait for a bearish fair value gap getting traded a bearish fair value gap getting created down in a downtrend, and then you see in the market reverse, and then a bullish fair value gap basically invalidates the bearish fair value gap. It invalidates it, and then turns the bearish fair value gap into an inverse fair value gap, while also creating another fair value gap, like a real bullish fair value gap. That's just a signal right there. Like that's an early signal that okay, we're going the opposite direction. So I had automatically entered right here as soon as the market came back. Now, because I'm trading a funded account, well, a funded account challenge, and the challenge is to be consistent, and the challenge is to make this amount of money. I can't make more. I can't go crazy. I just left one entry in and I put my stops below these lows. And I was like, listen, whatever happens, happens. Like I'm already halfway in profit, like halfway towards the profit target of $3,000. So I'm like, okay, it doesn't matter. Like if I lose in this, like I don't care. Like, but I was on a 30-second time frame, so I really, even though it was down here, this was like only like 185, $200 that I was risking. Like for real. Like so, off of having this entry and then me seeing that the bearish fair value gap was here, the bearish fair value gap was ran through. Hold on 1 minute. Oh shit. Yeah, so me seeing that the bearish fair value gap was ran through, going bullish, and then the bullish fair value gap was creating a this whole area of like this whole area was a high probability area. I was just like, okay, we're going to enter on that shit. And even though the market went bullish, right? And like if in reality, if you think about it, the market went. I literally entered like right here. So the market had went bullish and it came down, and I was in drawdown. So like to be fair, I was in drawdown. I was in drawdown, but not that much because I was only risking $200. So I'm zoomed in, like I'm in this in like a this is a sniper trade, 30-second time frame. I'm zoomed like real into price, like, and I'm seeing this signal, and I'm seeing it hold. I'm expecting it. Like I'm expecting it to hold at this level. I don't know what's going to happen, but my expectation is that it's going to hold at this fair value gap, at the inverse fair value gap, and it's going to hold inside the bullish fair value gap that was created. So I got the inverse, and then I got the bullish fair value gap, and then I got my stops at the low. So I don't know what's going to happen. All I know is that I'm expecting London highs to get ran, and then I just seen a bearish fair value gap get invalidated. I seen a bullish fair value gap get created, and then I seen the market take off from that level, and then the market come back down to retest, and then all I'm seeing is tested candles. Like all of these are all tested candles because if it was going to break through, it would have did exactly what you see here. You know what I'm saying? If it was going to break through, it's going to be a strong expansion through. There was no strong expansion through. So I was like, okay, this gave me confidence. And then I started getting back. I started gaining profit. Like I'm holding shit, watching shit doing going all the way up, come back down, going up, go. I'm just watching it, watching it, watching it. And I'm like, yo, come on, just run the fucking lows. And literally, I don't know what time it was. What time was it right here? Yo, yeah, as soon as it hit 10 a.m., like the market just said, because I watched it, I looked up my trade and I was looking at it and it said it was at like I think it was at like 800 or nine something. And then this candle came in, zoom, zoom, and then all of a sudden I seen 1200, 1300, 1400. I was like, oh shit. Like this shit just happened mad fast. Like so as soon as it hit 1291, I just said, this is my profit target. I'm about to pass it on this trade. So we're taking that bitch. And I closed out 1291. And that's how you see that we passed it. You know what I'm saying? That's how I made 1291 today. You know what I'm saying? Four contracts, two trades, 2-0 for the day, 22 minutes. Like, you know what I'm saying? And you see the 22 minutes holding it. Man, this was long. This was a while, bro. Like, I was really in drawdown, holding out, and then the market came back. Like, this was a great trade. Like, I'm proud of myself for this. And I'm just happy that we passed the second 50K. You know what I'm saying? You guys can do the same exact thing off this same concept. I have to stop this video real quick because I got that shit, gang. Like I got that shit. Like so, I'm about to just stop recording real hit right here, and I'm gonna resume with y'all niggas later. But that's it. That was a quick trade recap for Nasdaq 100, man. Holla at me, gang.